Hello, good morning, everyone. So let's have our daily briefing for today. And let's have a quick market recap on yesterday's data. Okay, so first things we have the Bank of England interest rate decision. So the previous and the market forecast still the same at 0.10%. And the release time yesterday was 8 p.m. And for the actual data, the interest rate decision for UK for the month of November still unchanged at 0.10%. So let's take a look on what happened on some currencies, to be specific on British pound. So startings, we have the British pound against the dollar. As you can see here, the GBP USD did not benefit from this data. So from 1.3637 territory, it fell down around 1.3552, almost 85 pips in just one data. Also, some major crosses like pound yen, it went down for almost 74 pips, and the pound Aussie went down sharply from 1.86 level, or 83 level rather, all the way down to 1.80 to 85. So it's around 99 pips or close to 100 pips in just one data. Second one is the pound against the Swiss franc. So from this area, around the 1.2454, it went down sharply around the 1.2388. So that's around 70 pips or 68 pips in just one move. So basically, the British pound or the interest rate decision is not a good data for UK. So that's why a lot of currencies that is paired by the British pound did not benefit from this data. So right after the release of the interest rate decision, the BOE press conference, they've stated that the two primary concerns right now for UK is number one, the unemployment rate, and also the inflation rate for UK. So what you're looking right now is the 5-year trend for the unemployment rate for UK. So we can clearly see that starting year 2018, the trend for the unemployment rate is on the way down, but right after 2020 started to have a trend all the way up. So their highest unemployment rate data for the year 2021 was 5.2%. And as of this moment, their unemployment rate data is around the 4% or close to 5%. And also we have the 5-year trend inflation rate for UK. So starting 2018, the inflation rate is controlled around 2%. And starting year 2021, the inflation rate started to peak around 3%. Keep in mind that for UK, their target for the inflation rate for a month is 2%. So which means that if the inflation rate did not control around 2%, it means that a lot of people will have to buy at a higher prices, especially if they're consuming goods on a monthly basis, on yearly basis. But right here, the current inflation rate for UK is around the 3 or close to 4%. Followed by the trade balance for Canada for the month of September. So the previous data is 1.51 billion Canadian dollars, and the market forecast at 2.1 billion US dollars. And the release time last night, 8:30 p.m. And for the actual data, it was 1.86 billion US dollars. So slightly lower than the market forecast, but it's higher compared on the previous one. Followed by the trade balance for US for the month of September. So the previous data is negative $72.8 billion, and the market forecast at negative 75 billion. And the release time, it's 8:30 p.m. and the actual data, it's negative 80.9 billion US dollars. So surprisingly, the trade balance for Canada and US did not create any move right after the release, to be specific on the dollar loonie. Next thing is the weekly initial jobless claims for US. So the previous data is 283K and the market forecast at 275K. And the actual data, it was 269K. So this one is better comparing on the market forecast than 275 and the previous data at 283K. And for today's economic data during the European session, we have to focus on the retail sales monthly and yearly basis for the month of September later at 6 p.m. And for the US session, the most awaited, the most awaited NFP. So 8:30 p.m. we have the employment change and unemployment rate for the month of October for Canada, followed by the non-farm payrolls for US. And also we have to pay attention for the unemployment rate for US later at 8:30 p.m. So let's take a look on what happened on the ADP data for US for this week. So obviously the previous data was 523, and it meets the market expectations, and the actual data was 571. And also for this week, the initial jobs claims was better comparing with the market forecast in the previous one, but the NFP data market forecast is around the 400K range. So if you can still remember, the NFP data last month was around the 190K, but as of this moment, the market forecast is around 400K. So the ADP data and the initial jobless claims is better for this month, and let's see what will happen later for the NFP right after the release, and it definitely would create a move in a lot of currencies. Again, for the US session, we have to pay attention to the non-farm payrolls and the employment change and unemployment rate for Canada. And for the European session, we have to focus on the retail sales monthly and yearly basis for the month of September. All right, thank you everyone for joining our daily briefing today. Stay safe and have a great day.